Hello, everyone. It's Rod with Pow Group. Welcome back on The Pursuit of Wealth. Today is Good Friday, March 29th, and with me today is John Kueber, CEO of Nevis Brands, which trades on the CSE under ticker symbol NEVI and PSCBF on the OTC. Welcome, John, and thank you for taking the time to meet with me today.
Yeah, great to be here. Thanks so much for having me, Rod.
You bet. My pleasure. So just before we get into I'll give you a couple easy questions to start off. Could you just tell us a little bit about your background and how you got into the cannabis space, please?
Yeah, so we're based in Seattle. I've been in Seattle for about 30 years. Seattle being known for a lot of different technology startups, and I was no exception. So was involved in the launch of an early e-commerce company that was acquired, then a voice technology company called Speechforms, and then Spoken that was acquired by Avaya, and then was involved in some media startups. One of those was acquired. So with that, I actually took a role as a chief revenue officer for a company called Source Technology. And Source actually develops a cannabis emulsion that was used and is used in many different beverages, including our own. Powered over 120 different brands. There was a large licensing deal that we put together with Valens back in the heyday. And through that 4 years with Source, had a lot of exposure to a lot of different cannabis companies, and of course oversaw the business that we ultimately acquired with Nevis that we'll be talking about. So baseline in technology for about 20 years, and really sort of got in that intersection of cannabis and technology for about 4 years before being directly in the CPG part of the cannabis business.
Okay, interesting. Thank you for that. And can you just give us in a couple of minutes just a short overview of Nevis Brands? I know you guys employ the licensing model and collect royalties, etc., but could you maybe just expand on that a little bit for the audience?
Of course. So Nevis, based in Seattle, and we own one of the leading cannabis beverage brands, Major. We actually own a portfolio of brands. Some of the other ones are Happy Apple, Vertus, Velvet Swing, but Major is really what drives our business. So Major is a 100 milligram beverage, tastes really good, hits really hard, hits really quickly, and it's very predictable, safe. Basically, the first sip is the same as the last. We've produced over $40 million worth of retail products without an issue. So people have gotten to the point where they trust the brand, and we have a history and a following, and we're really proud of the value and the trust that we've built with Major and our consumers. But what we do is essentially take our brands and work with other leading producers and manufacturers in other states to produce Major. So typically the conversation is with someone who's maybe in vapes or some other edibles, and we have a conversation about whether they want to introduce beverages to their lineup. There's a fair amount of discussion because beverages are still a smaller part of the market, typically around 3 to 5% of the overall cannabis market in each state. But it's complicated to produce a beverage, and it's hard to get it right. So we essentially de-risk the delivery of a cannabis beverage for one of these providers. And on our side, we're able to benefit from their market knowledge. We're able to benefit from their production facilities. We're able to limit our CapEx spend. And we're able to operate very quickly, scale very quickly through the partnership model. So when we acquired the business, Major was being sold in 5 states, Washington, Oregon, Arizona, Ohio, and Colorado. And we've been able to expand the business through this model over about 7 months into 4 additional states. So just we can delve into the financial more in a little bit, but roughly speaking, when one of our partners sells a product at wholesale for between $5 and $8, we're collecting around 20 to 25% of that revenue, and we're not tasked with a lot of COGS and a lot of CapEx.
Right.
So while our revenues are some perceive them as modest, they're high margin given that they're basically royalty revenues.
Gotcha. Okay, thank you very much for that. Yeah, I'm a big fan of the beverage space. I've been following the company now for a few weeks. I wasn't aware of the company before. I've been on trips as well to the US, and I've always bought some of the drinks whenever I would visit some of the different dispensaries, and they were not to knock your competitors, I won't say any names, but they were less than awesome. Let's put it that way. Everything from taste to the overall experience. And I'd open the can and it'd be some strange looking mechanism to open it, and it'd spray me in the face. And it wasn't an overall a great experience. So just from the look of it, it looks pretty amazing. The flavors and the overall quality of the packaging. So well done. Thank you for that. Absolutely. And in terms of operations, you said 9 states, correct?
Correct.
Okay. And is Nevis currently looking at other states such as Ohio, Florida, Pennsylvania, with all of the news coming out of those states that they could be adult use in the very near future?
Yeah, we've been well established on the West Coast. So, Ohio, we got into about a year ago while it was still medical. Ohio's been a great market for us, but with our coverage, I won't list all the states again, but Washington, Oregon, California, Arizona, Nevada, we have the West Coast more or less covered right now, and so our eyes are really on Eastern Seaboard states for our continued expansion. But we're focused on states that allow 400 milligrams, and that's not true across all rec states or across the U.S. 100 milligrams is really where Major does have a competitive advantage, given that it's hard to get 100 milligrams into a beverage and have it taste good.
Taste good.
So
that's a good point. And that just kind of I'm from Canada, for those that don't know, and here they have it's a maximum of 10 milligrams per package. So whether it be an edible, whether it be a drink, you can only put 10 milligram. I know they're working. There's a petition. There's a review of the MJ Act here in Canada, which we're expecting some sort of improvements to that, where we could see that go to 100 milligram. But with that being said, you don't have any major drinks less than 100 milligrams, correct?
For the most part, we do offer a couple of 50 milligram shots in Ohio. Okay. But yeah, we're focused on the 100 milligram doses with Major. Happy Apple will offer different dosages.
Right. And how much do these drinks sell for, the major drinks at retail?
It's going to vary by market, but typically it's between $12 and $18. Okay. In the more mature markets like California, Washington, it's at around 12, 10 on occasion. Okay. Yeah.
Okay. And how many retail stores approximately offer major drinks, to your knowledge?
Yeah, we actually just crested over. I mean, in aggregate across all 9 of our states, we're just cresting, if we're not past already, over 1,000 stores. So, Washington, California have most of those stores, or I shouldn't say most. They have a good part of those stores, just because there are so many to begin with. But yeah, around the market footprint in Washington is around 500 stores, and you could do the math with the rest of our states from there.
Oh, that's great. Thank you. And yeah, just to bring up the Happy Apple. So this is the product lineup that offers a little bit more of the lower side dosage. So you got your 10 milligram, your 50 milligram, and 100 as well. So for those that are looking for something that doesn't pack as much of a punch, that probably will be right up your alley. And then Utopia, you mentioned that as well. So this is the no sugar, no sugar, 0 calorie option, which that's a pretty big trend these days. And Virtus was pretty cool. First champagne style MJ. So
yeah, really. I mean, we love Virtus, and around the holidays, it's such a fun product.
Absolutely. What would you say is the second most popular drink other than Major?
It's definitely Happy Apple, and we'll be doing some announcements pretty quickly on Happy Apple and on our development of that brand. But Happy Apple, just as a quick aside, was the #1 selling beverage in Washington State. Then we introduced Major, and we actually disrupted ourselves. This is, of course, under prior ownership. But Major is the one who knocked. Happy Apple is immensely popular in its own right, and we're doing some things that are I think, going to increase the appeal even more.
Good to know. I can't wait to try them. Honestly, next time I'm in the US, I'm definitely going to be keeping an eye out for them for sure. In terms of licenses, do you typically have just one licensee per state, or do you have multiple?
Yeah, definitely only one. There's a, it's like looking for any partnership. You have to have cultural fit. You got to make sure you have the same attitude towards quality. nowadays you're not surviving the cannabis business unless you have good production standards. But we all know there's a time where you had a wide range. You had people operating out of semi garages that had licenses, and then you had people who were, completely GMP, and that range has tightened. We're typically looking for someone who has a GMP rated facility, or at least are trying to approach that standard.
Right.
We're looking for people who have established distribution, who are already successful in selling a non-competitive product, like say a gummy or a cookie or even flower or vape. And over the course of the negotiation process, you learn a lot about each other and whether you're going to be a good fit.
Yeah, try to find the best fit for that state or that market, right?
Yeah,
absolutely.
It's
a lot of due diligence probably goes into that, right? So
yeah, look, our partners are, people sometimes use that term lightly, partner, like a vendor. Our partners are partners, and we do a lot of battle together. There's a lot of trust, and we just know that you can't jump in. Even if someone has a great market footprint, does great things, if you're not getting along and seeing your approach to business in a similar way, it's going to be a painful couple of years.
Absolutely. And I've been noticing, not to discuss too much on the competitor side, but I have been noticing other competitors that were basically 100% beverage focused, and some recent news that they were going to be focusing on some other categories as well. Is that something Nevis is looking at, or are you basically just laser focused in and honed in on the beverage market?
Boy, there's a lot there with that question. Let's start with the last part first. We do look at expanding our product line beyond beverages. We think that's a great opportunity for us, and some announcements very short term on that exact topic. And it's
okay.
actually, I'll tip my hand a little bit. We've talked a little bit about gummies. It's been mentioned in some other releases. We see the opportunity to introduce major gummies in a couple of markets, leveraging the brand and taking that further. So more details on that. But to your initial point on competitors, the biggest competitor for us and for any other cannabis beverage, it's not each other. And there is a spirit of again, using the word partners, but there's a spirit of partnership with competitors and ourselves. Our biggest competitor is just the market understanding that cannabis beverages are awesome, that they work quickly, that they're healthy, that they taste good and they're fun and they're shareable and they're social. So getting that message across, I'm not punting on saying we're not competitors or competitive. We are, but we're not fighting other brands out there. All of us are trying to lift the awareness that cannabis beverages are awesome, and it's a pretty important point, because you're fighting each other for 5% of the market is not a great way to go. All of us have lifted the market from 3% to 5%, and all trends pointed going towards 10%. And it's not any single one of us that has done that. We've all been working towards raising that awareness.
Yeah, and beverage is kind of a different beast in itself, right? The category, because you hear a lot about taking market share from the illicit market and converting over to the legal market. And with beverages, there is no illicit market for beverages, right? Like, it's a brand new category. It's more about educating, marketing, getting the word out, so to speak, and kind of just honing in on the benefits of beverages versus inhaling flower and things like that, right? We all know that that's issues that come with that, and then the social aspect, right? So it's not so much you don't have that competitor as the illicit market like you do with gummies and things like that. So like you say, it's a different beast. And I think you touched on earlier, you said it's around 2 to 5%, I think you said, of the total MJ sales.
Depends on the state, but yeah, okay.
And then I think it's only like 5% of total edible sales. So there's still a lot of room to grow, right? And then, the fact that you mentioned gummies is probably a smart idea, because, like you say, only about 5% of beverages account for total edible sales. But with that being said, do you know if that data has really changed, or do you think that's still the case, 5% of total edible sales for beverages?
I don't have the data in front of me, but that sounds low. Looking at our gummies launch, we see, gummies being actually about 4 or 5 times the beverage market and gummies are the #1 edible in the category. So again, this is a guess, but I think on the overall edibles, we're probably closer to 10 or 15% of overall edibles being beverages, not just our brands. But yeah, that sounds low. I think beverages play a bigger role in edibles than 5%.
Yeah, and I did see that some projections were saying the beverage market could grow to around 30-40 billion by 2030, 2032. Where do you see the category going over the next, say, 5 to 10 years?
Well, yeah, difficult question. It's going to depend what you count. It's going to depend what happens with regulation to some degree. I mean, one of the biggest drivers this isn't an illicit market, but Delta-9 has been a big driver in cannabis beverages. We are not playing in the Delta-9 space at the moment, but there are some brands, people who have been working in what I would call the regulated space, meaning you're operating state by state, you're selling out of dispensaries. We don't need to go down the whole, we could spend the whole hour talking about Delta-9, Delta-8, but D8 and D9 are in a lot of beverages now, and those beverages are being sold across state lines. And, it is developing a lot of awareness for beverages, which is great. And that could raise the number of the overall cannabis beverage market dramatically. I think the fear is that D8 and D9 are going to be heavily regulated, just as THC is, and that could stunt some of that growth. So that's a bit of a digression, but all signs, just getting back to your question on growth of the market, all signs are, from the past 5 years, that the market is growing. We see sales growing. We see the overall category growing. I mean, with the category growing, there's more competitors, but we haven't really seen a decline in beverage in any market when you look at ourselves and all the other brands that are present. So 30 billion, easily achievable, frankly, if you include CBD, D8, D9, a little bit of regulatory help in terms of we're not in the CBD space, but if CBD was starting to be carried in more chains than just alternative grocery, that would be massive. Yeah. So it really depends on, I think that 30 billion number is counting a lot of different cannabis, a lot of different cannabinoids. I think if you look at the THC regulated space, it's probably a couple billion. I would say going from 1 billion probably to 4 billion over the next couple of years.
Okay, thanks for the color on that. Yeah, I've been in Colorado. I've seen CBD hemp products in the liquor store. There's talks about in Canada they're talking about bringing it to convenience stores and things like that. So grocery chains, obviously, lots of growth there. And then not to mention sporting events. Imagine going to see a major league sports team, and you're not going to be able to light up a joint or something like that in the middle of the the event, right? So it's going to be like beverages are going to be.
Minnesota is the leader in that you can go and watch a Vikings game and buy a 10 milligram cannabis beverage. It's pretty cool.
Yeah. So they're doing that already?
It's happening now.
Oh, I did not know that. That's good to know.
Yeah.
Awesome. Well, thank you for that. And then, obviously like concerts, events, restaurants, right? All of these yet to be penetrated. So there's a lot of growth, a lot of exciting future ahead for the space and the category, in my opinion.
Consumption lounges in Nevada are just something that's, it's not a huge driver yet of our sales, but it's just such a cool idea. And consumption lounges, just like a bar, there's no reason why there shouldn't be in every state. Yeah,
I seen even in Colorado they have like a bus, like a party bus. You can jump on that thing and ride around the city. Pretty cool. In terms of white labeling, is that something that Nevis has been looking at, or is that something that you would consider in the future?
Yeah, I mean, white labeling in the purest sense of, hey, we'll make we'll use our formula and allow someone else to put their brand on it. It's not something that we're focused on doing or want to do. We're focused on developing the brand major and finding the best partners to deliver it. And we could get into that business given that we know enough about how to make beverages and what sells and what's going to be successful. But we're a relatively small team. We're low, as we've talked about many times, we're low capex, we're low spend, and we have enough opportunity to continue with our model from 9 states to all 20 or so rec states to a couple more medical states. We have plenty of opportunity ahead of us just with our core business that we don't see necessarily going down the white labeling route.
Okay, cool. Thank you for that. And then switching over to some financial questions. First of all, congrats on the great earnings report, which saw Q4 revenue, you're welcome, of $395,876. That represented growth of 44% sequentially. Earnings per share, or EPS, was flat for the quarter. Total revenues for fiscal 2023 amounted to $671,545 and positive EPS of 0.02. Can you give us a little bit of color on what was the biggest driver behind that growth? Was it mostly entry into new markets?
Yeah, there's a couple different things. When we bought this business in June, it wasn't running at full optimization. The prior ownership, Source Technology, rightly so, they're focused on making emulsion and developing new technology. So there were a couple things we were able to do quickly in Washington State and with Ohio that drove those numbers up. Basically, it wasn't overly complicated. It was essentially getting them a lot more supply and getting them back into the market on a full-scale basis. So those two operational things helped. It wasn't a full quarter that we were comparing it to. The initial quarter was that we had to report on. We only were able to report 2 months. So, nonetheless, it still works out to about a net growth of about 12% that we're able to grow revenues. So
Gotcha.
The jump from Q3 to Q4, we're glad to announce that, but I'm downplaying it a little bit just because it's early days for our company. Those are only 5 states that reported. Come Q1 and Q2, we're starting to see some of the other states that are under contract, and I think that's where investors are going to start to see how much this business can really grow. We're proud of the jump. We're proud of what we're doing with COGS. We optimize on part of our licensing business is providing packaging to our partners. We've been able to take those packaging costs down by up to 20% in some markets. So again, not as excited about talking about revenue, but if you can lower your COGS, keep those managed, continue to grow the top line, and I think investors start to see regular revenue growth and COGS and margin being maintained. Those are businesses that people like to own. As an investor, I like to own those kind of businesses. So yeah, the jump is from new markets, but our new markets some of them are in very early stages. Nevada, California, we'll only get a little bit of those revenues in Q1. I think Q2 and Q3 are where people are going to start to see some real numbers from us.
Gotcha. Yeah, that's exciting. I'm going to definitely be following very closely. Again, congrats on the growth, and even the stock in terms of growth up almost 250% since the beginning of the year here. So kind of bucking that trend, where MJ is really starting to heat up again, no pun intended. But yeah, it's nice to see, finally investor fatigue is finally starting to become a thing of the past. We're starting to see that growth in stock prices as well. So congrats on the stock price as well. Like I said, that's some great performance in a relatively short period of time.
That was an interesting period we went through in November, December, not just us, but everybody. I mean, our market cap is around 4 million, and we could wave our hands all we wanted that, look, we're on track to do 3 million in royalty revenue. If you're an oil and gas company, you'd be trading at 30, 40 million. The segment was so beaten down that people just didn't care for a while. If you were in cannabis, they weren't investing. And that was sort of the start and the end of the conversation. That's changed now.
Absolutely. Yeah. And, I'm a retail investor. I've seen it, the investor fatigue, the frustration, the amount of just sheer, people are peed off, right? Like people are more than frustrated. And that's just what happens in a new emerging market, right? We need to be aware of that. And that's part of our job as a retail investor is to be aware of this, right? These things can stay suppressed for way longer than we ever think they can, and things can go irrational exuberance to the upside a lot longer, and sometimes very, very fast and a lot quicker than we think too. So having an entry plan, having an exit plan, obviously very, very imperative when it comes to being a retail investor and investor at large, right? So moving on, next question, cash position. So $418,524. Not a massive amount of cash, but obviously, you're making great strides with revenue growth and whatnot. Like you said, only representing a small amount of all overall states that you're operating in, and the company's still young. But I was reading through the MD&A, the management discussion and analysis, and the auditor had flagged a going concern and an operating deficit. Can you just give us an update and investors an update on the going concern that was raised?
Yeah. We're an early stage company, and there's, I think, lack of predictability that auditors are paid to point out risks, and I think what they labeled us is it's not untypical for an early stage company like ours, but to get more into the details of the actual question. So yeah, we don't have a huge cash position, and we have a note payable to the seller of the business, Source Technology, in July. And if you have a $500,000 note that you have to pay off and only $400,000 in the bank, and you're only making a certain amount of money to date, I think it's the auditor's job to point that out. The reality for us is we are, our core business is cash flow positive. If you look at the EBITDA, I have to stop myself, but the way our numbers are trending and going, I think there's less concern in terms of our cash position, and we're going to be able to address the note. We're going to be able to continue to run the business without doing another raise. We may set up some other credit facilities just to ease things over the next few months, but we don't plan on doing another raise. We're not going to run out of cash, and we think we're in for a great 6 to 9 months. But I don't disagree with what the auditor said based on the information that they have. But if I'm talking about our business going forward, I'm downplaying that concern.
Gotcha. Okay, perfect. And then I think you touched on it a little bit. Outstanding shares, 38,140,327. A big issue for MJ investors obviously has been dilution. A lot of investors have been burned by in the past. Canopy, all these companies have been really, just spending through billions of dollars. And speaking of which, you had John Bell right on as a director, former board member and chair of Canopy. And, that's really been something that has hindered the space, and really kind of PTSD still kind of lingering for a lot of investors. So with that being said, you don't anticipate any equity raises in the near future?
We don't plan on raising any new capital this year. We do have some warrants outstanding at 20 cents. Those get exercised. That's great. But short of warrants or options being exercised, we don't have, you never want to say never, but we have no plans to raise additional capital this calendar year. Gotcha.
Okay, thank you. And then in terms of, maybe 5 years down the line, in terms of, buyout target, is that kind of the plan long term? Are you looking to get bought out as a type of exit plan? Is that the goal, or do you have any color on that?
Well, I think, yeah, a buyout is something that's always a possibility, and it's usually a good result for investors and principals, but it's not something that we're seeking right now. There's a lot left for us to do on this business in the very short term. And what I mean by that is there's a lot of additional revenue for us to capture before I think we're fairly valued. We have a path to get towards 10 million in royalty revenues, and that's not in 10 years or it's in the next 3 to 5 years that we're trying to get to that level. So at that point, I think it's a better discussion, but right now we're blinders on, head down, trying to get to 3 million run rate by the end of this year, and 5 million next year, and 10 million within the next couple of years after that. So again, not trying to diffuse that possibility. There's message boards that talk about us being a buyout candidate, and we probably are. I mean, we are sort of a beverage MSO. We're in 9 states.
Right.
If you're a bigger company that wants to have immediate reach into all regulated states, we're probably a candidate, but it's not something that we're seeking right now.
Okay, gotcha. Yeah, the discussions will always probably be there, and yeah, it's going to be interesting to see if it would be an MSO type of style buyout, or a Fortune 500 company, something like that. So we'll see what the future holds. But in terms of competitors, you touched on that a little bit. I know you're based out of Seattle, Washington. I did some research. It looks like Jones Soda is based out of Seattle as well, and they have the new Mary Jones. So would you say that's a big competitor? They recently partnered with Tilray to bring those products to Canada as well. Would you say that that's your biggest competitor in terms of the U.S. landscape?
Yeah, I mean, they're a competitor. We see them in California and Washington, but it's not our biggest competitor. There's brands. PR 101 has never mentioned your competitor's brand, but there's other brands in California that do very well. There's a shot here in Washington that has been a top competitor over the last couple of years, and you see there's a brand known as Keef. I think Keef is a competitor in the sense that they have a similar strategy as us, going to multiple states quickly. So there's competitors within each state that we keep an eye on, but I have to go back to that message of, when I go to some of our pop-ups or vendor days, these are, when we have a table at a dispensary and people are walking in, it's not a question for them of which beverage am I going to get, Coke versus Pepsi. It's changing the mindset of them saying, no, I'm not sure I want to try beverage. And, getting them to understand this is a great way to go. I mean, there's room for more than one brand. There's room for many brands. If you walk into a 7-Eleven and see 80 different, energy drinks and sodas,
Right.
That's where cannabis is going to be at some point. So look, we look at our competitors, we think about them, we make sure that we're positioned in our lane to be successful, and they tend to position themselves in their lane to be successful. There's different formats, different cannabinoids, different effects that people are seeking, and there's room for multiple brands in this space.
Absolutely. Couldn't agree more. And then something that I was thinking about, just kind of, I don't know if you view this as a positive or a negative. A lot of people view it as a negative, and I'm curious to hear your take on it. But Molson Coors was big into the CIB category, right? Cannabis infused beverages. And they recently basically got out of it entirely. And they said, we're not tapping out forever. They just said, we're with the economy of scale, right? We're a scaling company, right? We're all about mass production. So it's not, totally surprising to see them get out, but they said they might get back in the future. Is that a major concern for you, or what do you think about that?
Well, in the short term, look, exit of any competitor is good news for us and other people who are committed to this business. So I don't see it as it's not a negative to see a company like Molson Coors taking a step back from the space. I think some of these players, these are smart people. They probably had some idea what they were getting into, but this is a very, very different business than the alcohol industry. You cannot ship across state lines. There's different regulations in each state. There's different packaging in each state. The list would go on. That doesn't really jive with someone who's able to crank out millions of units in a day, get them on trucks and get them to consumers. So very different businesses. It doesn't surprise me that they've left. I think as our market needs, I think, to grow, I think we need to see a little bit more regulation. In some cases, we need to be deregulated. In some cases, there needs to be more regulation, but to make this business predictable and scalable. And then I think you're going to see some of the larger players either want to get back into the space, buy other brands out, but them leaving the space, it doesn't surprise me.
Yeah, and that's a great segue, actually, and you made a lot of great points. it's a good segue into my next topic and few topics actually, which has to do with regulation and reform. And then obviously, when we get the stigma goes away, part of that is education, through all of the trying to combat all the propaganda and whatnot for decades and decades. But obviously, getting a rescheduling or descheduling ultimately is only going to help with that, right? Remove that stigma. And then, these big Fortune 500 companies are going to be that much more interested in the space once that happens. And then, with regards to rescheduling, I've always said that we're probably going to get rescheduling to Schedule 3. We'll get safe banking. We'll bring in the Wall Street banks, right? We'll bring in the JP Morgans, the Goldman Sachs, the Morgan Stanleys. They'll get positioned. Then they'll uplist to the NYSE and the NASDAQ, all these major producers in the US. Then they'll deschedule it similar to what Germany and Canada have done. That's what I've always believed and still believe is the most likely scenario. But what are your thoughts? I'm curious. A lot of people are saying it's imminent. What do you think about rescheduling in the US? Do you think that it is imminent? Do you think Schedule 3 is the most likely scenario? I know we don't have crystal balls, but just curious on what you believe. What's your gut telling you?
I believe Schedule 3 is imminent, about to happen. Does it happen before the election? Don't know. But there's enough political will and there's enough people pushing for it to go over the finish line. I would be very surprised if cannabis was not taken from Schedule 1 to Schedule 3. It makes business sense. It makes societal sense. There's too many things that are giving that tailwind to this happening. So, but people have started equating Schedule 3 with legalization, and those are two very different things, as most of your viewers know. I mean, it's one thing to make cannabis bankable, which Schedule 3 I think will do. By going to Schedule 3, then there's not the stigma of many banks who just still can't do anything. So it's going to bring a bigger investment base. It's going to make banking operations easier. Those are all very, very good things for the business, the industry, valuations, and so forth. But it still doesn't make cannabis legal. It's still going to be very difficult to produce cannabis and ship it across multiple states. That's going to take some time.
Yeah, it's going to make it easier for patients to be prescribed MJ, that type of thing, right? For doctors, it's definitely going to help destigmatize the industry for sure, which is an overall net positive. But how would that impact Nevis Brands, like a Schedule 3 scenario? Let's say comes out next week, Schedule 3 is approved. We go through the 60-day comment period, whatnot, maybe to the tail end of 2024, let's say 2025. Somewhere along that timeline, we get Schedule 3 enacted. How would that really impact? Like, what would that do for your business and Nevis Brands?
Well, I can answer sort of immediate operationally. It won't really change anything because we're already available in the states where we are. I think what it would change is over the next year, we would see other markets become more attractive. I think you'd see other states become less opposed to cannabis being legalized from a recreational standpoint, which creates more opportunity for us. From a capital standpoint, I think you open up a lot more investors who are able to invest in cannabis. Part of it is just them giving themselves permission to invest. Part of it is their brokerage firm or bank allowing them to invest. So, I mean, those are the two sort of effects I can think of immediately. But Schedule 3 doesn't automatically make a bunch more people aware of major. It doesn't instantly put us in a bunch of new states. There's still state regulation. We still have to go through what we do with our partners to produce product and get it into market. That's not going to change. Operationally, it's not going to change. But I just think in terms of consumer attitudes, it's going to create more consumption and more sales for us.
Absolutely. And I think, the ultimate goal, maybe you agree, we will probably get descheduling at some point, right? Whether it be 2, 3, 5 years from now, ultimately treated the same as alcohol and tobacco. I'm a believer that there'll be countries selling to other countries, right? So ultimately, I think descheduling will happen as the most likely scenario. Would you agree with that?
100%. I agree. It's the most likely scenario. The only caveat I'm giving is there's a graveyard of companies who have tried to anticipate the federal government's next move. And that can be really profitable in a lot of industries when you can predict what's happening from a regulatory standpoint. In our particular industry, you're much better off operating based on the laws that are right in front of you and keeping an eye on new possibilities. But I think that there's a lot of companies that have, CBD was something that people thought was going to be, legalized and regulated and an everyday beverage available on every grocery store by now. That hasn't come true. And in any event, we run our business based on the laws that are in front of us right now. And as I said before, we have a ton of opportunity just based on that. If the laws change, there's nothing negative about it, and it's all positive.
Thanks for that.
Sorry to sound heavy-handed on that one. I just we're probably anticipating Schedule 3. I think people were surprised at how little we're planning and hoping on the reschedule. We want it to happen, but we're not basing any strategic decision in our business on it.
Yeah, and it's not that hasn't been any meaningful reform in other markets or in other countries, right? We know Germany. Congratulations to Germany, just passed and signed into law their cannabis law, and that will take effect on April 1st. No, it's not an April Fool's joke. It's actually happening, and that'll be Pillar 1, right? Not for profit. You'll be able to grow your own plants at home, possess it. You'll be able to do social clubs, and then more than likely in a year or two, we'll see Pillar 2, where it'll be for profit and adult use sales. So, with that being said, I know Canada, me being from Canada, might make it a little difficult with your major drinks because they're 100 milligram options, which in Canada they only allow 10 milligram. But like I said, they are looking to increase that to 100 milligrams. If that were the case, would you consider expanding to outside of the U.S. to say Canada or Germany?
Absolutely, we would consider international expansion, and we're already having some of those discussions. The only thing that tempers the discussion for us is there's other states. For better or worse, we tend to look at other countries the same as we'd look at another state. It's another facility, it's another plan, and so forth. So there's some amazing opportunity within the U.S. for us right now, and that we have our hands full executing on that plan to go from 9 states to 20 states in the near term. Canada would be a fun market for us. I'm actually native of Alberta, so for me, it'd be like going back home and doing business would be a ton of fun. But very competitive market in Canada. I mean, I think you've seen, just because of the boom, there was a lot of capital chasing, a limited opportunity, and I think that's maybe changed now. It's probably a little more attractive for us, but executing on the states is job number 1 for us. Going to Canada, Germany, and some other potential international markets, it's in our sort of secondary plan. It's not something we wouldn't do, and it'd be fun. But the U.S. is our plan of record right now. I think you're on mute.
Sorry about that. Yeah, it just goes to show you the amount of growth too, right? Not like even in the U.S., you can expand to so many other states, and then Canada, Germany, the rest of the world, right? It's definitely an exciting time to be, either an operator or, some sort of participant in this industry, because it is, in my opinion, the best industry. We have some of the best people, in my opinion, in this industry, and the quality of the companies that we're seeing come out of this, and the research, and the breakthroughs that we're seeing from a scientific standpoint and a medical standpoint, just continues to surface and find more and more information, right? And like I said, with rescheduling, I think that's another thing going to help really, get us over that chasm, if you will, of that negative propaganda and stigma that has really plagued the industry for such a long time. But I live in Edmonton, Alberta, so awesome to hear that. And I'm in Canada, so I would love to taste your drinks. So if they come here one day, I'll definitely be doing product reviews on them. And I'm originally from the East Coast in Prince Edward Island. Not sure if you're familiar with that. Must be. Not too many people that are Native Americans know about PEI, but so I recently moved here about 3 years ago, and the the culture here, the cannabis culture here is phenomenal. It's just something to behold, really. And we as Canadians, we probably anticipated a lot more tourism because of the fact that we're over 5 years young here in Canada at the adult use level. But I think obviously with C-19 and everything that was going on around the world, people were sort of reluctant to get on a plane and travel. So I think that's something that's going to be to our benefit as well as we look for other markets to open up. But as we know, governments around the world, they don't move very fast.
Correct.
So,
yeah, correct.
All right. Well, that wraps up today's interview. Thank you so much. I really do appreciate the time today. I can't wait to try the products at some point. And I'm a big fan of beverages, like the overall, category. I try to incorporate them. And it's been getting easier too, right? In Canada, they started off selling for $15, $10 on average. And then after a few months, they dropped to $7. And now I'm seeing, the average is around $4 to $5 as a sweet spot. And that's Canadian. So for American viewers, that's only about like $3, right? $3-4. So very cheap now.
I'd love it if you edited that minute out of the show, because I don't want all of our customers knowing where to get cheap product.
Okay, yeah.
I'm totally kidding.
I can edit
awesome.
that out.
It's fantastic that Canada is maturing with that way, because again, lower the price, the more accessible it is to more people, and the more popular the category becomes.
Absolutely, and it's a healthier alternative, and the social aspect. You're meeting with a few buddies, you're trying to cut down on your alcohol consumption or something like that, right? And you feel a little left out, so it's neat from that perspective. And I'm excited to see where the category goes and the growth and where the company goes from here. So let's keep in touch, and excited to have you on in the future. Thanks so much for your time today.
Rod, thanks so much. Thanks for being a great interviewer. It's a privilege to be able to talk about our business for this long.
Absolutely. Pleasure's all mine. Thank you so much, John.
Cheers.